Hey, welcome everybody. We are here for Ticker Talk this afternoon. We will be going over all of your tickers, and I think that we'll do a really quick little sort of weekend update portion of the show because I'm going to be away this weekend, and I won't be able to record a weekend update video. So maybe we'll just look at a couple of things really quick and see what we've got coming up. So why don't we get right into it? Where is my other? Go. Yeah, so everything we do here is for educational purposes only. We are not investment advisors who do not provide investment advice. All statements made here today are my own personal opinions and not to be considered advice to buy or sell any security. All trading and investment decisions are your own and done at your own risk. So I think everybody knows who I am. I'm Kevin D in the Discord. Been trading for a long time. You can read this through if you like, if you want to pause, and if you're watching the recording. So like I said, we'll take a look at what's coming this week. I haven't had a chance to look at earnings a whole lot. I'm pretty sure a lot of the FANGs are reporting next week. It'll be very, very busy next week for the next couple of weeks in the earnings front. But coming up next week on the macroeconomic front, there's nothing on Monday. Although it is a very, very big week, as you may already know. On Tuesday, we have the CB consumer confidence. That's fairly important, but of course, nowhere near as important as what we have on Wednesday, which is the FOMC rate statement. How much are they going to hike by? Is it going to be 75 basis points? Is it going to be 100 basis points? The market is telling us it's going to be most likely 75 basis points. I should pull that up. Let's take a look at this real quick and see. So we've got, I'll just bring that in here. We have a 72.7% probability of a 75 basis point rate hike and a 27% chance that it is a full 100 basis points. So there you go. So that's on Wednesday, and of course, so that's at 2 in the afternoon Eastern time, and half an hour later, J-PAL's press conference. That's always fun. That often moves the market more than the actual rate statement itself. On Thursday, we have our first look at Q2 GDP, and we're expecting that to have declined again, which by most people's standards would put us into a recession. And then we also have unemployment claims. So this GDP thing, though, I mean, I think it's pretty much priced in. I think everybody is expecting that we are either in a recession now or going to be in a recession. Some people's definition of recession includes employment numbers as well. So take your pick. On Friday, we have core PCE. This is the Fed's favorite inflation measure. So interesting, that's coming out a couple of days after the FOMC. And then we have revised U of M, University of Michigan, I think it is, consumer sentiment. And again, that one is closely watched too. We want to see how consumers are feeling, and consumer sentiment appears to be at lows. So it'll be interesting to see if we stay at those lows or if we start to move higher. Let's take a look at some markets really quick. So that is the NASDAQ futures. Look at the SPY. So, okay. So on the weekend video, you can see I was thinking that we would chop around a little bit here, go up, chop around, and then go up some more. Was reasonably accurate here, especially if we get another big up day. And I mean, if this market can survive the president getting COVID, there's no reason to believe that anything's going to stop this, except maybe the Fed. So maybe we have more updates. Maybe we come up and test this 410 resistance up here. I'm not going to fight it. I was a little bit on the wrong side earlier today when we heard that the president got COVID. The market recovered really strongly from that. So let's not fight that. So that's our SPY. We're into this gap now. We might find some minor resistance at the top of the gap, but really the real resistance is up here at 410 to 411. So that's what we want to watch out for on SPY. Let's take a look at the Qs. Now I know the Qs, actually both of these indices are down a fair bit after hours. Snap reported and broke the market. I don't know why the market is so concerned with Snap and uses it as a bellwether for other big tech earnings, but the market seems
down like 20% right now after market.
Yeah, that's a lot. Yeah, we'll do an intraday chart in a sec because we should sort of see where we're at. But you can see SPY's had another good day. We've had, this is basically 1, 2, 3, 4, 5 out of the last 6 days were up days. And the day before that, 7 days ago was this nice reversal day on the big gap down. We've broken out the top of this this triangle that we have been watching, so that's very bullish. And we have similar resistance, a similar distance away in the Qs as it was in the SPYs. So we need to watch out for this 318 area and possibly this pivot here at 315-ish. But let's look at intraday at the Qs so we can see what's happened after hours. So when Snap reported, you can see exactly what happened here. This is a 2-minute chart, by the way. The one in the middle is. We fell a lot, bounced a little bit, and have pulled back even more. So we're down in this testing this 305 area. Actually, I'm going to change this to 5 minutes. So yeah, testing the midday low. There should be a fair bit of support right here. Be a little surprised if this breaks in the after hours. If there's more bad news overnight, then yeah, I could see it coming down from here. But I don't know. I think it's reasonable to expect a bounce here. And just for fun, let's take a look and have a look at Snap's nasty chart. Yeah, that's pretty bad. That is ugly. All right, so back to the Qs. And we'll go back to our daily chart on that. So where is it now? It's around 305. So yeah, for context, the market right now is, right where I've got that. Oops. Where I've got this line here. Right in around there. That's where we are now. So, we've given back a fair chunk of the body of that nice green candle there. But again, if the president getting COVID can't knock this market down, I can't see why Snap holds it down for very long. Let's take a look at the Russell small caps. These have had a good day. You can see this rounding bottom is still very much intact. The rally is on. And again, coming into some resistance, closing gaps, which is great, but coming into some resistance overhead shortly. What else should we look at? Let's look at the volatility index. And we can see that we've broken down. We were looking at this pivot level and concerned about this pivot level of 2374. We've broken down below that. The downtrend in the volatility index continues, so that is very good news for equities. There's no sign of this is ready to turn up yet. So yeah, liking how that looks. And while we're here, why don't we just look at oil and we'll leave it at that, I think. So oil still trying to bounce off this trend line and the 200-day moving average. But very weak today, big gap down, had a very small bounce right at that level though. So this is still holding. There's starting to be some fairly strong resistance in this area. We would like to, if we're bullish equities, we want to see oil, continue on the way down here, because that would be good for equities. There's actually one more thing. I want to take a look at the dollar cost averaging system, because this is the MACD is about to cross up Okay, the MACD line, the blue line, is about to cross over the signal line, and that is step number one of turning our dollar cost averaging system back on, allowing us to dollar cost average. Now I've got this set to sort of the medium aggressive setting on the moving average. This is a 200-week moving average. If you are very aggressive, you can set that to a 10-week moving average, and that would put this all into the more aggressive mode. And you'll see that it has today crossed, or this week, sorry, we're looking at weekly candles here, has crossed above the 10-week moving average. So if this were to cross, if the MACD were to cross up by tomorrow, that would turn us green and turn the dollar cost averaging back on. Now, when we look at the Qs with those settings, we'll see that without a doubt, this would turn green for next week because the MACD signal has crossed up from below the signal line, and it's above that 10-week moving average. It's not quite above the, I'll just go back to the 20-week moving average on that. You can see not quite above that, but getting really close. If we had another strong day, that would even be above the 20-week moving average. And let's look at the IWM as well here. And you can see the IWM, its MACD has also crossed up, and it's about to cross over that 20-week moving average. And I can tell you that it is also above the 10-week moving average. So, I mean, this is looking good. We're happy to see that, potentially our dollar cost averaging system is turning back on. That is a good sign, and it's just one more sign that a bottom. I didn't say the bottom, but a bottom is in this market. It's much too early to call it the bottom, though. I think that's probably everything I wanted to show you guys. Our abbreviated weekend update video here. So, I've got one ticker was sent to me. Actually, I'll just double check in the Discord and see if there were any last minute ones, but I don't believe so.
Kevin, can we take a look at the VIX?
Yes.
Oh.
Was there something you wanted to point out to me?
No, I just want to take a look at the chart.
Okay.
So it's at what, 23 now? Yeah, around 23.
Yeah. Yeah, so you can see we've broken below this pivot and the 200-day moving average.
Mm-hmm.
So this is all very bullish to me. I mean, it's bearish for the VIX, which is bullish for equities, right?
Right.
Yeah, I like this. I mean, this downtrend has been pretty much continuous. Except for a couple of really brief periods when it moved back up, but pretty much continuous since it topped out in here in June, mid-June. So this is now over a month of downtrend in the VIX. So
there's a possibility that it might hit its next support at 20, right? I think that's the next 20, major support.
Yeah. Okay. And 20 is a really key level too. It's a big psychological level in VIX. Mm-hmm. And that's why you see it bounce and a lot of price action around that level. I think it's going to take a fair bit of work to get it below 20. But if this rally we're on now, continues for another week or two, I could definitely see VIX down at 20.
Okay, thanks.
Cool. Okay, so we've got a new member has asked for Netflix, so we'll take a look at that now. And he was, what were his exact words?
I was surprised by their earnings.
Yeah.
Yeah.
He said he feels this one is way overextended on a mediocre earnings release. I can't comment on the earnings release. I really didn't pay that much attention to it because I've been watching, and I probably should have actually, because I've highlighted this for a breakout, and you can see what I wanted to have happen. Kind of happened. I would have wanted a few more days in here, but I remember on the weekend marking this up saying if it can consolidate in here for a few days, up just under resistance and then break out, that'd be definitely a playable breakout. I had a lot going on yesterday, so didn't end up, figured I had enough trades without Netflix, which I figured was kind of like possibly getting a little extended here on an earnings release. It wasn't that great, but it is what it is. So it is definitely breaking out. Has made a nice move, just like, it looks almost identical to the indices that we've looked at, right, over the last week, with this really strong move up. We've got really good volume on that. You're always going to have good volume when there's, an earnings release, but we had the volume the day before and pretty decent volume after. There will be a resistance here off of that pivot and the bottom of this gap. So it'll be really interesting to see what happens when it comes into this 240 to 245 area. Let's just mark this up. Let's get that in there. So yeah, that's pretty much bang on 245 right there. If it does get in here, and we've also got the 200-day, or sorry, 100-day moving average overhead. Just for Goodman, just so you know, the blue line is the 21-day exponential moving average. This green line here is the 50-day simple moving average. And then we have a 100-day simple moving average and a 200-day simple moving average. That's all the moving averages I use generally, except occasionally I'll use like an 8-day for my intraday trading. Things looking fairly bullish for Netflix, and it's moved above a couple of the faster moving averages, and they've started to turn up. So right now, there's no reason to believe this is ready to roll over. It looks like it's got more upside to it, but like I said, watch out for that 245. And this was one of the first stocks to really kind of crash. Way back in one of the first, big name stocks, right? When did it top out here? Yeah, in mid-November. I mean, there were a lot of small caps topping out in mid-November, but there weren't really big caps. And then it really kind of, on the previous earnings release really crashed down here. But it's been putting in this beautiful base. And I think that, maybe this is a bit of a bellwether for the whole market. It was one of the first ones to really crash. And maybe it's being one of the first ones to really recover out of this really nice base. So yeah, this could continue, I think. All right. That's all I got for Netflix. Does anybody else have any tickers they'd like to look at? You can go ahead and throw them into the chat, or just let me know what it is. You can unmute yourself if you like. Okay, maybe why don't we look at one that I've been talking about in the Discord. I don't know if any of you guys played this, but Nick really likes hymns. And it's been in an extended downtrend. We're starting to come out of that. We started putting a bit of a base here. You can almost, if you squint really hard, you can almost see a head and shoulders, or an inverted head and shoulders bottom here. There's kind of a shoulder here, there's a head here, and there's kind of a shoulder there. It's really kind of angled, and I don't like that. This is not a great example of a head and shoulders bottom. That's why I said you kind of have to squint really hard. We're definitely seeing bottoming action on this. We've broken the long-term trend and started moving up, and it's been stair-stepping up too. And I was saying in the last weekend video how we've kind of dropped the ball on this as a group, because nobody called this out, and there have been plenty of great opportunities to get in. Like right here would have been a really nice early opportunity to get in. It kind of gave you another chance here, another chance here, and after I saw this break and then it started to consolidate is when I got on it. I can't remember what made me look at it. I can't remember if one of the members brought it to our attention or not, or if I just happened to look at this again, you know, scanning through some of the old watch list names. But you can see that this is a fairly major resistance level. It's at 555, and we've broken out of that nice and clean. We went up today, we had that pullback, and then we closed on the highs. So no reason to think this won't go higher. We are at what do we got? Resistance here at around 675. Wouldn't be surprised to see this consolidate under here, and that would kind of fit with the pattern. You can see that would be about the same size move up that we've had from all of these breakouts. So yeah, watch out at 675 if you're in this. And you know, it's time to be tweaking your stop up. I've mentioned in the Tickers Are Watching channel what I was doing with my stops, and you know, gave some ideas of what you could do with the stop. Let's just go intraday on this one, so you can see this. I need to bring this down here. So yeah, when I initially went in, and you can see that green line is where I entered. Okay, I put a stop down here at 542, and then yesterday I was talking about how, you know, you could put, after it spiked, oops, let's go back to yesterday. There we go. After it opened and it ran up here, that's when I mentioned that you know, if you want an aggressive stop, and if you wanted to ensure that you took profit out of this, you could move your stop up to 582. But I felt that was too aggressive. I said I'm a lot more likely to move it up to 566, and a little later in the day when VWAP here kept holding, I did move my stop up to 566. So then this morning it had this big red candle to the downside, and that stopped right at 584. So if you'd had your stop at 582, you would have been fine. It would have bounced there, but this would have been a little too close for comfort for me. So I'm glad that I stayed down here at 566. But now that we have that price action, and the reason I chose 582 is because I was looking at this price action right here, this little consolidation here, and I wanted to be a little ways below that. And I figured, okay, you know, come into just below that little pivot high there, that puts you at 582. So that turned out to be a good choice of a potential stop. Now that we've gone and moved up, closed on the highs, had another reasonably strong day considering everything that was going on today, I think it is time to move that stop up to 582. So I'll probably do that tomorrow, you know, shortly after the open. So that is HIMS. I see that Ken has asked for DBX and GDRX. Okay. Oh, good RX. I bet you they're in trouble today. We'll look at that in a sec. Let's start with DBX. Actually, I need to make some notes here. So what have we looked at so far? NFLX. Okay. All right. So we've looked at this a number of times. Well, that was a really nice base that it built way back then and failed out of. We thought it might break to the upside out of that. It did break to the upside out of that little consolidation back there. I guess that's the last time we looked at this, was probably back here somewhere in March.
March, yeah.
Yeah. Okay. Let's back right up. All right. So yeah, we've got that uptrend from the post-COVID uptrend. Okay. Let's zoom in then. Look at this recent price action. So, I mean, this is looking fairly constructive, and we see a number of charts that look like this, and I've been noticing this sort of rounded W thing going on in a lot of different stocks, and you know, with a level here sort of thing, right? I think I'll take that level right there, That one looks fairly important, and maybe more important than the one above it.
1, 2, 3.
Just want to drag that down there. Yeah. So yeah, 23.30. Yeah. Is that a level you had on your chart, Ken?
Yeah, it was.
Oh, cool. All right, so we've come right into that. This is an area where we should expect a little bit of resistance,
Right.
especially coming into the 200-day moving average here. But, strong day today, right? Finished right on the highs. And again, no reason to believe that this won't continue up if the market behaves.
Right.
But, we have that, we have the indices have pulled back quite a bit after hours.
Yeah.
So, if that can clear up by tomorrow morning, then, this should keep going. This, see, if are you looking to add to this?
No, I already have a position
Yeah.
in this stock since like 2020 actually.
Oh, cool. Okay.
Yeah. I think the highest it's ever been the past 52 weeks. It was like at 33.
Right.
Yeah, I think that was back in November. But then obviously with the market, dropping, the stock follow as well. But I think it's held on pretty well compared to other stocks.
It has.
Yeah, it's actually Dropbox been holding on pretty well compared to other stocks. Yeah.
33 to 20-ish, I guess 19. What is that? That's about 40% down. That's a lot better than most. I mean, there's so many stocks that are down in the area of 70%.
70 to 80, right? Yeah. So I think the stock held on pretty well.
Yeah. Yeah, it has. So yeah, I was gonna say, I mean, if you're really aggressive and wanted to add, the breakout here might not be a bad place to add, except that it's already up a fair bit. I'm starting to feel like the market's a little bit stretched. But again, kind of like I said earlier, is the market is also telling us that it's still got lots of life in it.
Yeah, I'm long on this one. I'm not trading it necessarily.
Okay, yeah. So you're long term.
Yeah,
which I figured, yeah, and I thought that might be why you want to add more to it.
Yeah.
So, because it could, if the market's going to behave and continue to rally, this could have a fairly strong move from here up into 25.50 or so.
Right.
Is basically obviously the next stop for this, right? And the question then is, what does it do when it gets there? Does it consolidate nice and tight up there and then make another move up, or does it have sort of a looser consolidation like it had back between November and March? Yeah, it looks healthy.
Okay.
It's clearly now in an uptrend. It'd be really nice to see this make a higher low above this, because then that validates not a higher high above this high here, right? Because then that validates all of these higher lows. Right now they're sort of unvalidated, if you know what I mean.
Yeah.
Sort of this uptrend is not quite confirmed yet until we get a higher high. But we're getting really close on that. What else to say about this? DTG, Disguise This Guy, he loves his wedges, and he might draw a wedge like that. He might see this as a wedge, and if he does, then you would expect this wedge to break out to the downside. I'm not as big a fan of wedges as he is, so I don't really see it that way. I see this as an ascending triangle that's about to break out the top of the triangle. So yeah, I think this is fairly bullish.
Got it. Thanks.
You're welcome. Good RX.
Yeah, so I actually don't have a position in this one, but I'm looking to open one. This one has taken a pretty big beat ever since it went IPO.
I expected to see carnage here. Wow. So Amazon today said they're buying
they're acquiring One Medical?
That's right, yes. ONEM. who are in a similar business as these guys, are they not?
I think One Medical does something different, right?
Okay. Okay.
Let me
I
see.
thought they were a competitor of GoodRx. And you know what? I guess I'm wrong. I mean, the chart is actually telling me that I'm wrong on that.
Yeah, actually, One Medical does something else completely different.
Okay.
Yeah,
So,
they're like a network of primary care clinics. GoodRx is more like a healthcare tech company where it allows like consumers to compare drug prices across, different pharmacies in the United States.
okay.
So they can basically do drug prices comparison using mobile app or either their website, and it's all for free.
Excellent. Okay, thanks for filling me in on that. Because yeah, I know when that news came out, I took a look at CVS and WBA because anytime Amazon does anything in the health department, those two stocks go down, and you can see that CVS gapped down a lot today,
Right.
and WBA also gapped down a fair bit and regained most of it, got most of it back. And that's why I sort of lumped GoodRx into the same same kind of thing.
Yeah.
And they did gap down a tiny bit, but they got that back fairly quickly. All right, so what do we got going on? Well, let's get this gap drawn in here. So you had that gap. That gap's now partially filled. I'm going to leave the original gap in there. And we'll just maybe draw this pivot in here because that pivot may come in as resistance sort of in the middle of the gap. So we'll get that little pivot high right there. Obviously, this is just been getting hammered. Long-term downtrend. The downtrend has been accelerating quite a bit as well, which you kind of never really want to see, right? Because it's as this moves back up, it's going to leave that one right there, all these trend lines, for it to break through on the way back up. That's good. The good news is, though, I mean, as it does start to break through, then you can say, look at it. I mean, it broke through that trend line, and it broke through that trend line. And if you drew one, if we put one more of these on here, say from that, to here, and that one did, even after the gap, that one, it held below that trend line for quite a while, and then finally broke that one. So yeah, it has started to break, some of these downtrend lines. I'm gonna get rid of that one just to keep things a little bit clean. Now, there's sort of like a little bit of a pennant here. If you saw that right there, and we do have, we've got a tiny bit of a, oops, I missed the, it's not that. There we go. So yeah, so definitely have another downtrend here, and then sort of some higher lows. Made this little pennant formation. You could see that as a bear flag even, and it's broken out the upside of that. It's broken through its 21-day moving average, and today it looks like it's just closed above its 50-day moving average. So this is some important price action that it's putting in right here. But there's still, a fair bit of resistance overhead. We've got the gap, and we might have resistance off of these. We definitely actually do have some resistance off of these lows here. So let's get that one in there as well. That one should be fairly minor.
Data connection loss.
I would think that it's going to be able to get through that. Okay, I'd be more concerned with what's going on in the gap and this downtrend line and everything.
Reestablished.
So the question becomes then, I mean, or your question was basically, you're thinking about starting a position in this.
Yeah.
You have to decide if this is finished basing or not. And I think that what we're looking at here is a little inconclusive. And I think that there's still a fair bit of overhead resistance in this. And it hasn't really, kind of not seeing a great setup yet. I mean, maybe a good setup is if it can get out over yesterday's high.
Okay.
And as long as it gets into this gap. And so I imagine you're looking at this for long term. Is that right?
Right.
So you've done your research on the company, on the fundamentals and everything. So you must like the company.
Yeah.
Um,
Actually, they used to be my client.
oh, okay. Okay. So good. You've got a good sense of what this company is about too. If
Yeah.
they used to be a client.
Yeah.
That's good. That's helpful knowledge, right?
Yeah. Mhm.
Yeah, this is a tough call. This is a
Mhm.
tough call. I mean, definitely things are looking constructive here. There's no doubt about that. But are things looking entry worthy? Does this have? Let's say the market took another turn down. You know, is this gonna hold here? Is this low right here?
Yeah.
That's a question really. That's where your risk is, right? If the
Is
market
that 560? That's around 560, right?
560, yeah.
Okay.
That's the question you got to ask. Is that going to hold?
Right.
Yeah. Okay. This was never a SPAC, was it?
No, I think they went through the traditional IPO route.
Okay. Yeah, I didn't think so. Sometimes, occasionally, you see, because normally you'd see like a flat line at $10, right? If it was a SPAC, but occasionally, all of that disappears when they de-SPAC.
Right.
Um,
They weren't in a SPAC. Yeah.
okay.
Yeah. The IPO price was actually around 24, between 24 and 28.
Okay.
Yeah.
So it's way down from that.
Yeah.
I mean, maybe there's good value here.
Yeah.
If the fundamentals say they're good, there's good value, and if you think the market has bottomed, or
I'm thinking I might wait until like after next week.
that's probably not a bad idea.
Yeah, because next week I feel like it's gonna be very volatile.
Yeah, it might cost you a little bit to wait.
Yeah.
On a risk reward basis, I think it's worth it.
Yeah. There's just too much going on next week where I just don't feel safe right now just to buy in on anything.
Yeah.
Yeah.
Because this is not screaming buy right now.
Right, exactly.
But by next week it might be.
Yeah. We'll see how next week goes. There's too much going on.
Eyes off things.
Yeah.
Because it is looking ready, like it could maybe get going.
Yeah. Okay. No, that's good. Thanks, Kevin.
Yeah, you're welcome. Let's see. Brandon would like to take a look at Amazon. Okay. So yeah,
put in a double bottom, but it's coming up into that resistance area.
yes, it is. Well, yeah, I mean, really, this is like, this one has the quadruple bottom going on. I know we looked at this quite a while ago, well, not quite a while, a number of weeks ago, with all these bottoms, all these lows right here, and the rising RSI. So bullish divergence on that RSI we're looking at, and it's really trying to sort of fulfill that, right, and continue on its way up. The lows are now starting to rise. We did finally make a higher high from these two swing highs, so that's great. We need to, similar to, I think it was DBX, need to get out above its swing high from back in from early June. To do that, it's got to get into the gap. It's got to get over this 100-day moving average. So has definitely got some resistance overhead. It's had a nice run. This is a big move here too. This is probably close to 15% move in just over a week. So from that low to where we are now, yeah, 16.5%, 17% to where we are now, and in just over a week. That's a big move. This needs a rest. So I would think, Brandon, in the short term, best case scenario, this has another update, maybe a couple of updates to get into here, goes sideways, and then breaks out through there, and then gets you up to the top of the gap. But it's time for this, and a lot of stocks like it. Frankly, it's time for them to take a break, and I really hope that when they do take a break, that they do something like this, but without this, right? We just, need to go sideways a little bit. That would be very constructive, I think, and healthy, and then move up. But what we're seeing here, I mean, this is good, right? This is exactly the kind of price action we want to see after it's put in a number of lows here with that rising RSI. This definitely built a good base. It's unfortunate that it failed the first time it tried to come out of that. To get this level in here too, somewhere in around there.
This just seems like Amazon is not really representative of the other stocks in the QQQ, like based on the price action. Because the QQQ is up only 5%, and you said it's up 17%. So
yes, well, I think a number of the FANGs have been doing really well. I mean, Netflix is up a bunch. Meta, I think, didn't Meta turn up? Yeah, see, Meta's turned up a little bit. This chart is just so messed up ever since the split. What was that from? So from 157, yeah, see, this is a big move as well in Meta. Off that low, that one's 16.5%. Amazon's consumer discretionary, actually. It isn't even tech. Apple's, having a really nice move. I think that off that same low here, that won't be 16%. I think that was the day of that low. What are we looking at? So even Apple is like 9% from that same time. So that's pretty good. Well, a lot of these tech stocks are quite healthy. The big question is how much longer can they go? How much longer will people keep chasing these? I'm sure people are feeling, people who haven't chased these yet or haven't bought into this are starting to feel some FOMO. But I think most reasonable people would look at this and go, is this a little late to be getting in here? I got to wait for a pullback, or at least a consolidation, right? So yeah, I think it's going to run out of steam shortly. So the big question becomes, what happens after that? Do you have any other thoughts on this, Brandon?
I don't know. I'm just kind of stuck with all the other people that when they had announced the earnings.
Right.
Does it see negative 37 cents a share?
Is that what's
the last earnings was? Yeah, that's what it says on your chart.
Oh, the last earnings, right. And now they're expecting 14 cents a share. Interesting. Let's check earnings whispers on that. It might be more accurate than. Earnings whispers says 19 cents a share. So even more than eSignal's 10.
I think they should be profitable with all the boom and summer shipping and all this that I'm seeing.
Yeah, and I think last time, didn't they take a write down or something? I mean, I know that they bought and leased too many properties for warehouses, for COVID and everything. And I know they were trying to get rid of some of them. So maybe that stuff is now going to be coming off the books, and maybe that's why they're expected to actually show a profit again. So,
yeah, it was just $4 billion in extra costs last quarter due to the. I don't know what it was. That's a lot.
Yeah. So hopefully they can get it together, because if Amazon misses and starts coming down, that will make the market roll over. And when are their earnings? On the 28th. The 28th, that's the same day as GDP, isn't it? Scary. Yeah, there's a lot going on next week. So between the Fed and a bunch of big earnings, it's going to be a bit of a scary week. All right, so I think that's all I got on Amazon. Anybody else have anything they'd like to take a look at? nobody's got anything in play?
Yeah, can you do Qualcomm, Kevin?
Yeah, we can take a look at that. We can take a look at that, James. Wow, this has had a nice move. So semiconductors have been doing really well in the last week or so. This one actually, more than a week. This is a big move. We should measure this too. So off of that low, wow, almost 30%. Why is this using the wrong ruler here? There we go. This is easier. So yeah, 29.5% off of this most recent low here, and which is almost 32%. 32% off of the low back in June. Crazy, really nice move, and not showing any sign of slowing down. Hey, NS, nice to see you join us. Don't usually see you here. Glad you could make it. So yeah, so this has just blasted through these areas of potential resistance, right? It went into the bottom of this really old gap. I don't know why we still have this gap on here, actually. We should just get rid of that. Okay. But, there are all these pivots on the way back up could have acted as resistance, and none of them really did, right? And now we're coming into another one. We got right through all of these moving averages. And in fact, when the pullback, that 100-day moving average acted as support. We have gone through the 200-day moving average today. We've got a little bit of minor resistance overhead at around 150 to 160 area. But there's no reason to think that this just won't keep going. This seems one of the happier semiconductors. I know that some of them pulled back on Seagate reported after hours. We should look at the intraday on this because Seagate pulled back quite a bit. I know it's not a real semiconductor, Seagate isn't, but it did knock down some of the others. But this seems to be going mostly sideways after hours, so that's good. If we look at Seagate, we can see that Seagate was down a fair bit. This is down from, what are we at, 84, and is now at 75. That's a big drop for that one. Can't remember. Yeah, so look at Micron. Micron down on Seagate's earnings. Big move down. How about Intel? Intel down a lot. Who else should we look at? AMD, I guess. AMD down a couple of bucks, so not as bad. But so Qualcomm is holding in there nicely when all these other semis are going down. Actually, let's look at SMH. We can see that this has moved up really nice as well, and this is now right into resistance here. So, yeah, I wouldn't be surprised to see semiconductors take a break for a few days now, and QCOM may take that same break. But maybe QCOM just goes sideways here for a few days before continuing its move up. But looks fairly safe from the carnage that Seagate has caused. So yeah, a little bit of resistance here around 160, maybe some at around 168, definitely some at 175. But this looks like it has really turned the corner here. I would definitely say that the bottom is in on QCOM. I think that even if the market has another leg down, I think there's enough support under here now to hold this up, and that may very well be its bottom from this bear market. And hopefully, I don't jinx it there. So is that helpful, James? Do you have any comments on that?
No, yes, sir. That's pretty much what I was looking to hear.
Okay. Glad I could reinforce your biases. And Enna says, yeah, finally. not be able to join live sessions. Thanks to taking time off from work. Oh, cool. Yeah, good you could be here. So, any tickers you want to look at, NS?
Kevin, yeah, probably Square, I guess. I think it kind of broke out of its in the 70s, and I was looking at it and I'm thinking maybe it can run to the 80s.
Yeah, 80, low 80s is probably going to be a problem. That 80 to 83 area, where we had this congestion before, so that starts at 80 and it moves really, moves all the way up to 88, right? I could totally see this coming up and congesting in there. But it's still, I mean, this breakout here is still very young. It had some trouble today, but it did get out. I mean, yesterday, got above that 50-day moving average, and today it held above it, but was unable to break out to new highs. So that's, not what we want to see kind of when the market actually had a really, really good day.
Yep.
Considering everything that was going on. I want to get some more lines on here. I want to highlight some of these patterns.
It looks like a lot of the stocks are giving a similar sort of indication, and I think SPY as well, right? It looks like a
yes, very much so. Yeah, and we talked about that at the beginning of the session.
all right.
So you'll if you go back and watch the recording, you can see that I totally agree with you ahead of time on that we're seeing similar patterns there in the indices, with them nearing resistance, but putting in sort of a bottoming pattern. We've seen this triangle. Was that a GDRX? I think it was, or DBX. A similar triangle here like this. Seeing a lot of stocks breaking downtrend lines, as this one has started to do. So, I mean, you could definitely have a downtrend line here, which broke recently. There'll be a longer term downtrend on this, of course, and let's get rid of that. It's going to be a while before. Sort of our very long-term downtrend is right here, and it's going to be a while before we get up and test that one. It's so we're seeing a lot of this. We're seeing a lot of the most recent downtrends have broken to the upside, and we have to start worrying about some of this overhead resistance. And in Square, it's in around this $80 area. If we get through that, and should probably actually draw in right here at around 88.90 area as well. Right off of that pivot right there. Well, I don't want that to be that though. This is not a major resistance. This is just a minor one. So yeah, watch out for this level here at around 89. And then you've got, the 200-day moving average overhead. You've got that downtrend line. You've got this former gap. A lot going on here. A lot of potential resistance when we get up into around 100. So plenty of work to do. Are you looking to add to this, or are you just kind of like hanging on for dear life like I am?
Oh no, I don't actually have a position on Square, but I was looking to actually maybe start a position in some of these really beaten down stocks, like Square or Baba maybe.
Yeah.
Because that's another one that seems to have kind of been beaten down quite a lot. I think Baba was the only one I think that's showing like a wedge that was, I think, towards the downside rather than the upside, if I'm not wrong.
Okay, we'll go look at Baba in a sec. Yeah, this one, I mean, this gave us a nice opportunity right here. This would have been a great place to buy. You get the little breakout here, you get a little bit of momentum. You're starting off right. Today's action concerns me a little bit. I don't like the way that's inside like that, but in a way, this also gives you another, this gives you a buy right above yesterday's high, essentially, because this was so tight, right? And if you wanted to, so here's one of the ways I enter investments, because I'm so much of a trader. I really need them to work right away. And I want to get out of them quick if they don't work right away. And I'll get back in it. If I like it as an investment, I'll get back in it. But if it doesn't work right away, then I kind of want out. And so what I'll do is, and we'll just zoom in a little bit here. I will enter. But I'll look at this high right here, because we've got this nice tight day, right? And if we can break out above these two highs, we should get some momentum and move higher. Okay, and I'll do that, and I'll be like, all right, so yeah, I'm going to take that, I'm going to play it, I'm going to start it like it's a swing trade, which means that I'm going to put a stop just below the low of today. So I'm really sort of tightly risk defined on this, because I figure if it comes down below, and certainly if it closes below the low of today, it's probably going lower, and it's got to go and hang out in this area here again. And I just don't want to sit through more of this sideways action, right? So that's how I would play it. That's the way I would be comfortable entering this. Of course, you're not me, and you have different risk tolerances and whatnot. But I'm just throwing it out there as a potential way that this could be entered, even as an investment. Sort of enter it like you would enter a swing trade. Play it like it's a swing trade at first, and then when it starts working, then your stop is much looser, if not at all. But I still think this is early in here. It's still just a little too messy for my liking in here. I would have liked to see this just been stronger today. So that's what I got on Square. Let's take a look at Baba.
Yeah, and I think I agree with your. I think I'm agreeing more recently with this run. I think of just adding small portions as a swing trade, and then if that really works out, then moving your stop loss higher. I think I saw your post on Hims and Hers. I think
yes,
how you were basically moving the stop loss higher as it tests each level. So I think that was really useful. So I think we should. Yeah, it always, I kind of start panicking when stock starts to shoot up after it bounces off a certain level, like AMD, for example. I saw it at 75. I was willing to pay 75, although I knew maybe it might go lower. And as soon as it started bouncing, I kind of panicked and just hit a market order and just bought the stocks. But then I think it just went down the next day, retested, I think, further low before it actually bounced. So I got a better price of it. But
so you're probably talking about this day here or this day here.
Correct. Yeah.
Spot, then you had this little pullback.
Yes, correct.
Right, and then it took off.
Yeah. So it looks like it kind of tests. It always does retest a particular support line, even though it breaks through the first time, right? So is it always a good idea to wait for a second test of that same level before you enter a stock or a trade?
Yeah. So here's the thinking on that. There are like kind of two schools of thought, right? And it depends how aggressive you are. The real low in this is down here, right? And some people say, wherever you get in, especially if you get in here, well, yeah, I mean, if you got in on that day or that day, you really did kind of have to have a stop below here. Okay, so below 71.50-ish. I think on any of these days, really, as an entry. You might have looked at this old. I think the 74 line is from way back in the past. It didn't really totally act as support. In In fact, let's actually just pull that down to where it did act as support. Yeah, I think any entry in there has to be below that low. But then once you break out above this, so if you're an investor, you're probably thinking, okay, so we had this swing low, we're going higher from that. The next low that I need to worry about is probably here, right there. So then you would put a stop below that. That's sort of you're more conservative. You're an investor. You're going in small because you know you have a wide stop. So
Right.
that's one way to take care of that. You want to look at really significant lows. Okay. Now what I just showed you was very much a very short-term swing trader kind of entry and stop. And this is more of a longer-term swing trader, even position trader kind of entry and stop, where you're looking for a very significant low to put your stop. And now that this has moved so far away from here, this low does become more and more significant. But we haven't had another pullback yet, right?
Yeah, exactly. Yeah.
Could still pull all the way back to here. You know, this could still pull all the way back to here, test this, and then turn up. And that would still be reasonably healthy. I mean, we wouldn't be terribly happy about seeing that happen, but you know, it could totally happen. So yeah, just kind of be aware of that when you're setting these stops and sort of using this sort of methodology for entering your investments. But I think we've all sort of learned that the days of entering an investment and just letting it go down forever, and even worse, you know, averaging into it before it's proven to you that it you know, that it is on the way back up. You know, we got to stop doing that, because a lot of us got hurt doing that. You know, buying these things on the way down or just hanging on to them. I saw an interesting report last week. I should have actually posted it. It would have been good to post in the Discord. That showed that about an 18% stop, even on an investment, is about the most. 18% is about the most you want to allow a stock to go down. That once they've gone down 18%, they generally don't recover. They usually go down a lot more, and it takes too long to recover from that move. So that's something to think about as well. One more thing I wanted to slipped my mind. Okay, so we were looking at Baba, weren't we? We're gonna go look at Baba. Yeah. Okay. So not really liking the price action I see. Baba was awesome because this is another one that was sort of early to put in this bottom pattern and start moving up. But it kind of like it's really kind of topped out here. You know, it put in this pivot. It couldn't break through. It tried again, and it faked out, right? This is sort of nasty fake out. Really caught some breakout players here 2 days in a row. And it's no wonder that after putting in these two candles, it's no wonder that this gap down and fell down. Now it did put in a nice hammer candle here. And we would normally expect it to move up after that. And I do not like that it's really just going sideways. Because, you know, really what this looks like is a bit of a bear flag. And, you know, a bear flag obviously is bearish. And we expect to see that break out to the downside. Which is not something I want to see happen to this. So, you know, if we measure this bear flag, it gives us, you know, down into here, down in the 85 area, which is a little, you know, which is pretty close to also this sort of major support. So I think we need to be very cautious with BABA right now because of this bear flag. If this does break out, I think it's going to go down to, you know, have another fairly quick leg down. Now, if this actually fails, but one of the things that could happen, I've seen this happening a little bit lately too, which has been good. We have seen you know, we've seen some breakouts to the downside, and then it's down for a day or two, and then it goes up and it starts to shoot up. That's a possibility if we see a breakout to the downside. Another possibility is this just goes up and breaks out the upside of this. And if it does break out to the upside of this, it should move fairly quickly back into the bottom of this gap at the very least. But right now, you know, it's kind of, Baba's a bit in no man's land for me. I wouldn't, if I was going to add, I have a position in this. I've got a really good cost basis on it. I didn't start buying until down in here. So I'm looking good on this. But if I were going to add to the position, I think I'd want to see it clear. I'll probably clear these 2 pivot highs, but clear all of this mess and start breaking out and through, and maybe even through 130. You know, this form of resistance line up here. That all makes sense to you, NS?
Yeah, yeah, I think so. So yeah, I'm also, I do have a feeling like it's going to actually retest 80 for some reason. I mean, it shouldn't lose 80, I think, for sure. But I do have a feeling it's actually coming down. Actually, I was looking at the fundamentals of Baba the other day, and I was like looking at their earnings, some details around that, and yeah, I think they're looking at like a EBITDA growth to kind of be negative, I think, for 2023. Just because I think they're increasing investments in logistics, and they're making some additional investments and stuff. So, but anyways, I agree with I think the technical analysis as well. That's great. Thanks for that.
You're welcome. Yeah, I'm just looking at eSignal is telling us $1.60 on their next earnings. That's a massive swing from the minus 95 back in May. Interesting. Yeah, that's going to be a really interesting earnings release, that one. I will obviously be watching closely on that. All right, so Mark, would you like to take a look at Palantir? Mark, I thought you exited this position. Where did you get back in? So I know in the a few weeks ago in the weekend briefing, I talked about this base. Actually, were we talking about it back over here? I don't know. I know we've talked about Palantir a fair bit. Mark's got some calls on it. Okay. But definitely we were looking at this base, and I was kind of making another base. And you know how I love the base on base. So let's take a look at that. Let's really highlight what that looks like. Okay, see how we got a base, and then we step up, and we have a higher base. This is awesome. This is a very strong, powerful pattern. That it broke out so weakly today is really surprising. And also, you can see I had highlighted a potential entry. Now, you would have gone okay. If you'd taken that entry, you would still be okay. But I'm not sure why this pulled back. I wanted to actually look at this intraday. So, okay, this was strong in the morning. And we're looking at a 5-minute chart here in the middle. Strong in the morning, pulled back. This pullback, I think, was, did that correspond with the Biden news? Because the Biden news is around 10 o'clock, I think. Yeah, I guess it did in here. Yeah, where a lot of the market continued on up, this just went sideways the rest of the day. So that kind of like makes this little breakout suspect. Don't like the breakout to have a selling wick like that. But we did close it above the 100-day moving average there. So yeah, whether or not this particular breakout works or not, this price action we're seeing here is very constructive. This is very much, you know, rounding kind of bottoming action, quite healthy. So yeah, I think you know, if your calls are long term, I think you're in good shape. If your calls are really short term, you need this breakout to work. Because if this breakout doesn't work, it's going to come back down. And it's going to test the bottom of this. It's going to test the bottom of this base again. Tweak that up a little bit there, and that looks better. Yeah, it'll come back down here. Probably test either this rising 21-day moving average or this 50-day moving average here. So there you go. Plus the PT increase. Would that be profit target increase? What does PT stand for? I'm going to feel like an idiot when you tell me, right? Strong buyer recommendation. Okay. All right. Yeah, you're welcome, Mark. Okay, I think that is everybody's tickers. If there's anybody who wanted one and didn't get it in, this is your last chance. Let me know right now. Otherwise, we're going to call it a day. We're going to look at what we got coming up. All right, so this Sunday, there is not going to be a weekend video because I am away taking a little vacation. We won't have a ticker talk on next Thursday, a week from today. No ticker talk, but everything back to normal Sunday the 31st of July, and we will have a ticker talk in here. What is that? 1, 2, 3, 4. The 4th of August, we'll have a ticker talk. So that's what we got coming up. We'll see you all in the Discord. And as always, feel free to ask me any questions you like over there. Let's, we've got a lot of nice plays have been setting up lately. So let's point these out for everybody. Ask questions. If you see something that you think is looking good, let's take a look at it. Because we can all get in on these and profit on these moves together. And yeah, if you're watching the recording, don't forget to hit that thumbs up, and we will see you all again